Hello and welcome to the fifth video in the serial trading video series. I'm going to take a look at entry and exit triggers and just a little summary here. So Japanese candlestick patterns are my favorite, but OHLC or open high low closed bars can also be used as well, as they represent the same data. But I just think as far as these triggers are concerned, the candlesticks are just more visually appealing and easier to identify kind of just with a quick glance of your eye. So that's why I prefer the candlesticks. I focus on a small number of patterns, but there are many more. And in the first serial trading video, I provided some links to some candlestick material where you can learn a lot more about candlesticks if you're interested. So what I focus on here: bullish or bearish engulfing patterns, dark cloud cover candlesticks, piercing candlesticks, hammer candlesticks. That's basically it, but I mean there might be a few more I pay attention to, but for the most part these are the ones I pay closest attention to. More significant when viewed within the context of a larger price pattern. So if you're working a larger price pattern like an Elliott wave pattern, and you're anticipating it being completed soon, and you have various reasons for that, what you're looking for is kind of a signal that something has changed, an early signal to get in early for the next wave up or wave down, depending what you're looking at. And that's the idea with these entry or exit triggers. And also you can use software to scan for these particular patterns, at least for the beginning of a trade idea. So if you know that you like, or if you know that many of your good trades have started with a bullish engulfing or a bearish engulfing pattern, well, you can at least start there by scanning for recent bullish or bearish engulfing patterns, and then looking at the charts of those scan results and seeing if you see a interesting, price pattern along with a recent engulfing pattern, and see if you're interested in basing a trade off of that. So it's just a place to basically do your homework and start, right? So we can move on here. So here's bullish and bearish engulfing pattern. So with the bearish engulfing, you open higher than the prior candlesticks close, and close lower than the prior candlesticks open. Okay. And then obviously if it works, you can continue down for a number of price bars. On a bullish engulfing, it's the opposite. You open lower than the prior candlesticks close, and close higher than the prior candlesticks open, and that gives you a bullish engulfing pattern. Next slide, dark cloud cover. So basically you had an up candle. Now the next day or the next period, but typically I look at these on a daily basis or higher, you gap up, so you open above the prior candle's close, and then you close down at least halfway through the real body or more of the prior candle's real body. So that's called a dark cloud cover. So you open up and close significantly lower, and more importantly close below that 50% level of the real body of that candle. Now the bullish opposite of that is the piercing candlestick, and that's where you had a negative candle the day prior or the period prior. You open below it, but you close back above more than 50% through the real body of that prior negative candle. So that's a piercing candlestick. And then of course the hammer, you basically have a long lower shadow, and it doesn't matter whether the real body closed higher than opened or closed lower than opened. That's not that important. What's important is that long lower shadow or long tail or long wick that you're looking for, kind of that rejection of those lower levels. Now with the case of an inverted hammer, which I'm not showing here, it's the opposite, and the shadow is to the upside instead of to the downside. But not to go too far into the candlesticks, again, if you want to learn more about them, you can certainly look at that link that I provided in the first video. So we'll move on here. Okay. Now what I'm going to do is just look at some daily candlesticks here on AMD, since this is a pretty good example that I can quickly point to of some nice, now this is on the daily time frame. some nice bullish engulfing candlesticks. So let's zoom in here. Let's just go back to, just kind of give an idea. So what was this? Back in January 2021, so we had a high here. Now we were in this kind of corrective period, but there came a point where we had a very recognizable bullish engulfing candlestick right here on the 19th of May of 2021. So you see we're in kind of this downward, sideways to down environment, but then we stopped going down, basically started drifting sideways. So there's no real entry yet, no signal, but then boom, we had the bullish engulfing candlesticks. We opened well below this candle's real body and closed well above, and you can see we actually did it to multiple prior candlesticks. Basically 3 or 4 prior candlesticks we engulfed the real body. So from my experience, the more prior candles get engulfed by that bullish engulfing, the more powerful it is. So in this case, several of them were engulfed, so that's a pretty powerful signal, right? And if it's going to work, basically the low of that engulfing candle is going to hold, not be touched again, and you're just going to basically start trending up. Well, that was a good example, because the next day we were up, and then, I mean, it doesn't go up every day, but basically that was the beginning of a pretty significant new uptrend, right? And then we continued, but then eventually we made a high, and then we went to another consolidation period. Okay, so at this point, you're in multiple weeks of consolidation, but at this point you're identifying probably a corrective wave pattern of some sort, and you're just waiting, you're waiting for your entry point, right? Now, what did we have here? So right here was another good bullish engulfing candlestick on the 6th of October 2021. So you open below the prior candle's real body, closed above the prior candle's open, well above it in this case. Again, you're looking to engulf, for the engulfing candle to engulf the real body of that prior candle. And then we had another nice move up. Tiny little pullback here, but then look, another bullish engulfing. And then another nice move up. So you get the idea. Now, it's not that all bullish engulfing candlesticks result in such strong moves up, and it's not even that all of them result in a lasting move up. You might just pop up the next day and come down and take it out. They don't all work. But what the point is that when there is a good trade to be had, there's often, well, I would say almost always an entry trigger that happens before it really gets going. So that's the idea of looking for that entry trigger within that larger context. So within the larger context back here, this was obviously a very corrective sideways. This wasn't some big crash in AMD. This was an opportunity, a correction of what was a larger uptrending stock. Okay, this was a corrective move, and this was an entry trigger kind of signaling the possibility of that correction being done, and then gave you an opportunity to get in, or give you a signal to get in for that larger resumption of the uptrend. Okay, so that's basically the idea. Now, I just show bullish engulfing, but you could find charts with bearish engulfing candles, piercing, dark cloud cover, etc. But I just don't want to spend too much time on that. You can certainly do your own homework if you're interested. But that's basically what I want to go through. Now we'll go over to Thinkorswim and look at the entry triggers. Okay, the scanning for it. So if we go on Thinkorswim, there's something called the Scan tab, and you can scan for various candlestick patterns. Right here, you can just bullish only, or bearish and bullish candlestick patterns. In this case, we're just scanning for engulfing, bullish. Now this is the time frame, so daily. You can play with this, of course. And I think we're just looking back within the last 20 days, was there a bullish engulfing pattern? And in this case, we're looking at all the stocks in the S&P 500. Of course, you can modify what you're looking through and make sure they're all optionable stocks, since I like to trade options. Yeah, there you go. So let's scan. And we'll show the top 50 results or whatever. Okay, so in the last 20 periods, there have been no bullish engulfing candlesticks on any S&P 500 stocks. So let's switch to bearish, since we've been in kind of a corrective period, sideways to down. Let's scan for that. Okay, well, there you go. Lots of bearish engulfing candles. So what you would typically do is you look at all these individual charts, see if there's any attractive looking price patterns, like Elliott wave patterns, and then see if there's something that actually looks like a possible trade for you. Let's just pick down here Netflix. I know Netflix has been a very strong downtrending stock, basically crashing, and we just had a recent bearish engulfing pattern on Netflix. So let's go over here and look at Netflix, NFLX, and daily. Okay, all right, so yeah, there on Friday, we had a bearish engulfing candlestick on Netflix, engulfing 1, 2, 3 prior candles, actually 4 prior candles, real body. So that's quite a powerful bearish engulfing candle on Netflix. So that is highly suggestive that Netflix is going to go lower here. So that's something for a potential bearish trade. What if we go on a short time frame? Is there any entry opportunity here? Not really. This is basically just in free fall here on the short time frame. So not necessarily an actionable trade. You kind of be chasing it here, in my opinion. But maybe on a short-term basis, you look for a little pullback if you're day trading Netflix or something. And if you get a little, ABC up on the 15-minute chart and start coming back down, maybe that's something you want to short or buy some short-term puts on or something. So that's basically the idea. The scan, revealed that candlestick pattern, and then just an idea to go look at, to place a trade or something like that. All right, well, not to go into too much more detail. That's probably good for this video. But yeah, definitely the candlestick patterns alone aren't, a full trading system, but viewed within the larger context of everything, the overall trend, the price patterns, everything else, there's certainly a key ingredient for a good trade setup. All right, until the next video. Thanks.